Hi guys, good evening and welcome to today's session. Please, can you hear me? Let me know if you can hear me. You can unmute. Hi Esther, welcome. Abiodun, welcome. You can wave if you can hear me. Let me know my audio is good. Hello. Hi Patrick, welcome to today's session. We are going to begin in a few minutes from now, but I need to do a sound check to be sure you all can hear me. So please let me know. You can unmute your mics. Let me know that you can hear me. Thank you.
We can hear you.
All right. Thank you very much, Esther. Okay, so in a short while, we'll begin with the session, but let me just do a brief introduction while we wait for others to join. Hi, Linda. Welcome to today's session. All right. So you guys will be learning a lot in this session. But before I go into, a little introduction of what the session will be all about today, I'm going to briefly introduce myself. So my name is Blessing Uboma, and I am known as the Wise Money Coach. So I am a finance and investment educator. Okay, and what I do on this platform, because I know a lot of you have joined from the social media space. So what I do on my platform, I use my platforms to, educate the public, give updates on investments, and, as well as, guide and walk you through investments you're interested in. And also, I take it from the scratch. So I've been doing this for more than 6 years, and we are a registered organization, we're a registered company. All right. Now, having told you this about myself, I would just like you all to feel free to introduce yourselves in the comments, like your location, where you're joining this session from. I am hosting the session from Lagos, Nigeria. So feel free to drop your locations in the comment. And, we will begin shortly. Okay. All right. So welcome once again, Linda, Nena. Welcome, guys. Welcome. Welcome. Okay. So now I think we're just going to go straight into what we have today. And I'll allow you guys to drop your locations, in the comments, in the message box, in the chat. Okay. All right. So that way we can just move forward. So today's session is going to be a very educating session. Now, what we are going to be doing in this session is letting you understand how important it is to be able to choose the right stocks. I know a lot of you have joined because you are either interested in investing in stocks sometime in the future. Some of you have, started taking baby steps, while some of you are actively investing. Yes. But this topic we are going to talk about today is not something that is it's not always spoken about. All right. So in as much as a few people say it or talk about it, but it's not really been dealt with. Now that is the essence of this session. We want to delve deeper into this topic, let you understand, the benefits of investing in the right stocks. And today I'm not just alone, okay? I have some investment friends with me from ARM Securities Limited, which is Asset Resource Management Securities Limited, okay? Now, they are going to do justice to this topic today, and I'm sure that by the time this class, ends, you all who joined would have, you would have the knowledge which, you can continue your stock investment journey, or, that knowledge to begin, or, knowledge to put two and two together in your stock journey, basically. So this session is really, really important. Now, and I also know some of you who have joined, you may have begun, you may not have begun. Some of you basically, maybe you haven't started investing in the stock market, you hope to someday. This class will not really focus on the basics of stock market, okay? That is why I just want you to understand that for those of you, I know some of you who joined our last session, I believe last month, you were able to understand the basics of the stock market. And I'm sure some of you are joining this session again. So I just want you to know that for those of you who would still want more knowledge, like on the basics, we can discuss further later after this session. But I want you to know that this session is going to focus on how you can invest in the right stocks in the stock market. All right, so this session is also a recorded session, and I believe after the session, you all would have, a copy of the replay so that you can still play it and, get whatever it is we've discussed, or you have, the knowledge shared in this session. But that doesn't mean you should want to stay away hoping to get a replay. Okay, welcome guys, and I'm excited for for you all who have joined. I'm really excited. I think I'm more excited than you guys. Hi Linda, welcome. So I know I think I'm more excited. I don't know. I'm more excited for you guys because this knowledge is not, it's not knowledge that you get on a regular. All right. So welcome guys once again. All right. So I'm going to start with one of the very important benefits. One of the important benefits when you get to choose the right stocks. As an investor in the stock market, I know a lot of people have different they have different notions when different intentions, different thoughts, different expectations when it has to do with the stock market. But I need you to understand that when you invest in the stock market, you need to begin well. Like I said, this is the essence of this session, okay? Now, for those of you joining, we have begun the session, and please, Whatever questions you may have within the course of the session, there will be time to take questions and you have your answers. Okay, so you can put down your questions maybe on your writing notepad or somewhere so that you do not forget. Okay, now it's important to understand that when you're able to pick the right stocks, it helps save you a lot of headache and drama. Right from your money, right from the money you invest in the stock market, your capital, it can help save that money. Let me put it that way. It can help preserve your capital in a way that you wouldn't be running into unnecessary losses. That's just one aspect. So it's a way of you putting your capital to good use in the stock market. So you do not just jump on investing on anything. Okay. Now I have heard situations where people say, oh, I heard about MTN, so I went ahead to buy MTN stock. Okay, yes, you would know about MTN, you have the app. We've gone past the stage of you just knowing what app to buy stocks on. We've gone past that stage, you just knowing that, okay, I can fund my brokerage account and, buy stocks. No, we've gone past that stage. At this point, there are certain things you need to understand before you hit buy on your ARM1 platform or you hit buy on whatever brokerage platforms you use. But you need to understand there is more to buying stocks. That is what this session would address. It would help you understand that your capital is important and you need to take the right decisions. Okay. Also, it will help you understand that it can save you a lot of stress. It can save you a lot of stress when investing. Some people invest and they're already having, headaches like, oh, I'm not sleeping, the market is down, this and that, But, if you understand these things, you would reduce the amount of stress you'll be having in investing in the stock market. So psychologically, it will help you if you know what you're actually doing in the stock market. So it's key and it's really, really important. It's really important that you know the right stocks to invest in. It's not just about knowing that, oh, MTN does this or MTN does that. No, it's not just about that. It's not just about Dangote is in the industrials or they do this. There's more. There's more to it. Now, this is what, my friends from ARM will be, talking more into. I'm just, laying the ground for this session to kick start. All right, properly. All right. Now, please, I want you to understand that. Hello. I want you to understand that this is a knowledge sharing session. And for us, knowledge is more important so that because with the right knowledge, of course, success, is you have a higher percent chance of success when you're investing. Okay. So it would help you put good use to your money, put good use of your money. It would also help you psychologically. Your mind would be at rest, okay? In as much as the stock market has a way it behaves, it has a mind of its own. It's an oga on its own. Let me use that word. But there are certain necessary steps. When you hear us say, have you do your due diligence? This is where it all begins. This is where it all points to. Okay, it's not just about picking stocks. Imagine you are investing in a stock. I wouldn't say a wrong stock, because even those ones that are expertly recommended, sometimes they do not go the way we expect. Yes, okay. So it happens. The stock market has a way. You as an investor, you need to understand that it has a way it behaves. It's an oga on its own. It does what it wants to do. Okay. Sometimes you can follow trends, and this year is a different case. So I need you to understand that whenever you hear that phrase, do your due diligence, this is where it comes in. you have to understand the certain aspects of doing your due diligence. Okay, so some of those will be discussed in this session, and I believe that at the end of this session, you're going to go back, to your stock investing with a different mindset. You're not just going to be picking anything and be hitting buy. Meanwhile, your money could be growing in a good stock, but your money is languishing in one stock that is, that has given you nothing but headache and losses. Okay, so the time you would have wasted in a stock, that you're not supposed to buy is more painful. And then talk less of the money you lose. So picking the right stocks when you're investing is key when you're investing in the stock market. All right. So in 1 minute, I will be, giving the floor to our first speaker. And our first speaker, she would be taking the floor and, doing justice to this topic. All right. And I need you to all understand that whatever it is, like I mentioned, whatever questions you have, you need to understand that you have to put it down so that you do not forget. Okay? All right. So let me do an introduction of our first speaker because she would be coming in a minute. Okay? Just a second. Okay. All right. So our first speaker for today is Mojoyinoluwa Olayemi. Mojoyinoluwa Olayemi works with ARM Securities, and she's an investment advisor. She is a seasoned expert in this area, and is one you should listen to before you either begin the investment journey or while you're in that stock investment journey. Okay, so I would allow Mojoyinoluwa to take the floor. Hi, Mojoyinoluwa.
Hi, good afternoon. Good afternoon.
Yes, you're welcome.
Can you hear me?
Welcome. Yes, we can hear you. All right.
Okay, good afternoon.
Good afternoon. You're welcome to this session.
Thank you very much for the warm welcome.
Thank you. Thank you.
Yes.
All right. So we are looking, forward today to, hear from you and, what's your take? What do you have to say to stock market investors? Because this is something that, they need to understand. So I'll be allowing you to take the floor now. And I believe we are going to learn a lot today. All right. Thank you. Go ahead, please.
Thank you very much, Wise Money. Good afternoon to everyone on this call. It's nice to meet you all. I hope that at the end of this session that you've learned a few things from the things I'll be speaking about. And if you have any questions, you can just raise your hand or interject, and I'll be happy to answer. Or just to make it a bit more tidy, right? We can ask questions after my session. I'll be happy to answer any of your questions. So my understanding is that everybody here is interested in the stock markets. You may already have stocks in the market, or you are considering having stocks in the market. So I'm just here to just give a few tips that would aid us to, make the best investment decisions or choices as the market continues to expand. So the first thing you need to consider when you are trying to invest in the stock market is to invest with a goal in mind. A lot of people come into the stock market just because they've heard, a lot of success stories from their counterparts, and they're like, okay, you've made 20% of your money, you made 100% of your money, blah, 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 blah. That always, is a very good, way to catch people's attention. There's nobody that doesn't want to double their income. There's nobody that doesn't want to triple their income. So a lot of the time, people just invest because, this person told them that if they put in this amount of money, you will get this amount of money back. And that's not the way it always works, because the stock market is very, very volatile. Somebody could enter the markets, and then their own story or their own encounter with certain stocks will be different from yours. It just depends on your goal. That's why I said you have to, first of all, have a goal in mind. Are you investing for the long term? Are you investing for wealth creation? Are you investing to, cater to any educational expenses you have for your children, or you just want regular income? So for instance, now, if a retiree is considering, putting some money in the stock market, I wouldn't expect the retiree to invest in any other income or any other stock that does not pay regular dividend, because a retiree is not in paid employment. They don't have a salary coming in every month, so they make money from the regular dividend that this company makes. So that's why I'm saying that you have to invest with a goal in mind, a set objective. You don't just invest blindly, or just because your friend is doing it and it works for her, and you think, okay, you enter the market and then the same outcome will be yours. No, that's not how it works. You should always invest with a goal in mind. And then the second tip I would also give is just to, first of all, look at the company's fundamentals, right? So we have a wide range of options of stocks to invest in. You can invest in the industrial goods, consumer goods. You can invest in oil and gas. You can invest in banking. Like the options are endless. So you also have to understand the company's fundamentals. Is the company consistently profitable? Is the revenue and earnings growing over time? Does it have healthy cash flows? Because all of these things, they are all intertwined. They're the ones that would make sure that you as an investor are not burnt out. Like the company does not make you regret your decision for investing in that company. So then, like I said, my third tip would have is also don't invest based on hype. And that just speaks to what I said earlier, that just because, Twitter is usually the medium for this kind of hypes. A lot of people come and they'll tell you, this is it, but they don't really tell you like the not so good stories. They tell you only the good stories. And then with investing in stocks, it's a very risky environment. So there are times where you do lose money, and there are times you make so much money that than your 9 to 5 could ever make you. So it has different ends of the spectrum. You shouldn't always just pay attention to what people are saying on the internet, because at the end of the day, they're just trying to garner people, audiences to their own platform. So you have to do your own research, make sure that you've done your due diligence. Don't just invest because, oh, so person said so. It's okay to have coaches. It's okay to have people on the internet that you look up to or you take advice from, but also make sure that you on your own end are doing your own background check, because it's your money at the end of the day. If you lose money, you can't go and cry to them and expect them to give you the money back. You get. So I hope you're still with me. We're still following. I'm not speaking too fast. Okay, I'll take that as a yes. Anyway, the fourth one would be to diversify your portfolio. So when you have done your due diligence, you've made sure that, okay, this company that I am investing in is a good company. It has good historical performance, like the last 5 to 10 years. It has consistently delivered on the bottom line of all the important indices of its financials. You now say, okay, I have exposure to the banking sector. Let me also diversify into consumer goods. Let me diversify into oil and gas. Let me diversify into insurance. Let me diversify into just any other sector that you might think of, right? The essence of that is because, like during the period where the CBN gave a forbearance period on the banking sector, right? A lot of banking sectors dipped. So assuming you have all your money in the banking sector, meaning that all your investments will plunge. But assuming you had money in oil and gas, you had money in insurance, you had money in consumer goods, you had money in all the other sectors, that are equally performing in the economy, you will not be too hard done by the banking sector. Do you understand? So it's always important to spread your money across different, sectors. And that could also mean not only equities, you can also do fixed income, you can do mutual funds, depending on what suits your investment objective. And then my fifth tip would be to invest only what you can afford to leave invested, because a there's usually this notion that, okay, you invest a certain amount of money and you expect to see like a return of 100%, 20%, or a ridiculously, unrealistic return in a short span of time. Because maybe that money that you've put there is something that you need to use to cater to any expenditure that you may have. And usually we always encourage people to invest part of their disposable income. Don't invest money that, oh, you want to use for what is it called? Maybe your rent is due next month. You're thinking, okay, I can multiply this money if I put it in a good stock. It can actually happen, but it's better to be safe than sorry, because like I said, the market is very risky, it's very unpredictable, it's very volatile. So you don't want to be at the, the hard end of the stick. You don't want to be burned by the market because it happens, and that's just something that cannot be avoidable. So you always make sure that you invest money that you can afford to leave invested, so that if the money is yielding income for you, if it's yielding returns for you, you're happy. If it's not, you are also going to wait it out, because there's usually a popular saying that the market rewards the patient investor, which brings me to my last point, which is think long term. A lot of the time, the investors that make, very good, return on their investments are people that just allow the money to sit and work for them over time. Like people that invested some money 5 years ago, like people that got into, like, for instance, a stock like Seplat when it was 1,000 naira and today it's trading at 11,000 naira plus. You can imagine how big their return will be right now. Like they'll just be smiling because they've allowed the money to work for them over time, instead of just, putting the money 1 month in, liquidating it, putting the money 2, 3 months in, liquidating it. You will not really see the best return or the outcome of whatever it is you have invested in the stock market. So it's always good to just allow your money. If you're putting this money into investments into stocks, just allow it to do its work. Don't even think about it. And when I say don't think about it, I'm not saying, oh, don't monitor the market, or don't, keep up with daily updates or daily information relevant to the stocks you're holding. No, you should, because that will also help you to know when to exit and enter into the market. But I'm saying don't be too fixated on that money. You've put the money for investment purposes. Let that be the case. Let that be the reason why you have put that money. Don't put the money because you feel like, okay, you want this money to come back in a, you get what I'm saying? That, like, you have expectations, you have objectives for this money, yes, but always allow it to work for you, in the sense that don't put too much pressure on that money. Don't even, like, put too much what is it called, expenditure, or fixate on the money too much, because the outcome could be very, it could be positive, it could be negative. But all the same, a patient investor, a long-term investor will always come out on top. So with these few tips I've given you now, I would now go on to tell you how to select good stocks. So, like I mentioned earlier, you first of all have to look at the company's fundamentals. Do the fundamentals coincide with the goals or objectives you have? Like now, if I keep on using this example because it's usually the most effective way to explain things. So, if you have a retiree, for example, the stocks that a retiree will be looking to will be stocks that will pay its regular income, since they no longer have their paid employment income coming on a monthly basis. They may have their pensions or whatever on a monthly basis. This dividend, if you invest a good amount of money in companies, you also stand a chance of getting good dividends in return after they declare their what's it called, earnings reports at the end of the financial year. So, looking at the company's fundamentals, the retiree will not necessarily want to invest in a stock like Zichis. And that's not to say that Zichis is not a good stock. I mean, they had a good half-year earnings reports that show that, okay, the company has company has grown in its in the major indices between, Q1 and Q2. So it doesn't mean that the stock is not a good stock. It just means it doesn't cater to whatever objective you have as an individual, as an investor. So it's always good to look at the company's fundamentals. You ask questions as, like, is the company consistently profitable? Are the revenues and earnings growing over time? Does it have healthy cash flows to meet its current business expenditures and operations? And then secondly, you need to understand the business. You need to invest in companies whose products, services, and business models you understand. I know maybe if you don't have a background in finance, it may be difficult to understand these things, but you can also engage your investment advisors, your relationship managers, people you know that work in the sector that can help you to, um, to explain these terms properly so that you can understand them and become more knowledgeable, because knowledge is power. At the end of the day, if you have understanding of something, how something works, nobody can come and say they want to take advantage of you or they want to shortchange you. You get what I mean? Because you understand what it is that you're saying. You understand what you're saying, you understand what it is you're investing in. So it's always good to understand the business before you invest or put any money or capital into it. Then evaluate the management team. A lot of the time, you need to be sure that okay, a strong, transparent, and experienced management team is running the business in which you're investing in. It's usually a good indicator of a well-run company. Like, and a good example is like a GTB. A lot of people always commend their MD Segun Agbaje for running GTB as a very profitable business. And then that also gives people the confidence to want to put their money into the stock. So you need to also consider the management team, have an understanding of what they do outside the um the operations of the business, just to be sure that okay, these people are actually seasoned professionals. They know how to run a business. They know how to put resources to good use, and all of that. Then the fourth one is consider the country's the industry's outlook. So even great companies can struggle in declining industries. You have to look for sectors that are strong in the long term with growth prospects. For instance, now a lot of analyst predictions are not too bullish on consumer goods. That's the likes of maybe PZ, Dank Sugar, etc. They are not bullish on them because we are now in a not a deflationary period, but disinflation. We're experiencing a decline in inflation. So people are not expecting consumer goods to, maybe do like 20%, 30% of its current price, because where inflation is in place, companies are able to hike prices because they'll tell you that okay, the prices of goods and services are currently increasing. So they too will take advantage of those things when they are pricing their goods and services. So you have to also consider that and just know that is this a good time to invest in consumer goods? Is it a good time to invest in oil and gas? When the Iran and US war was going on, you think to yourself that do I want to be exposed to oil and gas in this time? Because that would obviously make, like, whether it's not between Nigeria or it's between Nigeria, involves Nigeria, the oil industry is very global, and a lot of these things are intertwined. It's a ripple effect. So if the outcome of the Iranian and the US war is negative, it impacts the global industry, impacts the global financial, even investment industry. So you need to be wary of things like that when you're considering the industry's outlook. And then the fifth one is just check the company's health. Review the key metrics such as the revenue growth, the profit margins, return on equity, their debt levels. Are they very exposed to debts? Are they, over leveraged, stuff like that? And then their earnings per share as well. All of these things are just, like I said, you may not, to somebody that is not, financially finance affiliated, it may be a struggle to understand it, but it's not something that is impossible to understand. You just need to meet, like I said, people that are engaging you on these talks to explain these terms to you better, so that you can give them, so that they can give you the right knowledge you need to be able to make these decisions. And then the seventh one too is for people that, because I don't think there's anybody on this call that will want to invest in a stock that doesn't pay dividend. Dividend is like, because at the end of the day, we are investing in equities, right? You can't really you can take out the money, right? But the essence of investing in equities for the long term is that you can't take out your capital till maybe like 5 years, 10 years, depending on what your investment objective is. So dividends are the ones that they are the income that will serve you, or that will be coming in whilst your money is working for you as equity. So you also have to look at dividend history. Companies with a history of paying consistent dividends often demonstrate financial stability, because at the end of the day, dividend is a portion of the company's profits that they decide to share with their shareholders. Obviously, it's based on the management's discretion, but it's usually the a portion of their profits. So if they are making profit consistently and they are declaring dividend, it's a good indication that, okay, this company is profitable, this company is financially stable. Obviously, that's not the only indicator. There are other things that come into play alongside dividend yield or dividends, regular dividend payment. But it's something that, it's like it's one of the key indicators. But not to say that, oh, that's the only thing you should look at when considering to buy stocks. So yes, I I usually say this to people that I talk to, like my friends or people that engage, my clients that engage me on stocks and are very much so inclined to dividend paying stocks. I always say buy great businesses at reasonable prices, not cheap stocks with big businesses. So that's just to say that at the end of the day, price alone doesn't determine value. You need to ask yourself 3 questions before buying any stock. Is this a quality company? Can it continue to grow over the next 5 to 10 years? Am I comfortable holding this investment, even if the market declines temporarily? That's just to say that, okay, if there's a dip in the market, will I be, what's it called, or at the edge of my seats because there's a decline? Will I be the way there's a lot of panic that comes in with losing money. People don't like to lose money, but the truth of the matter is that sometimes you have to lose money to make more money. The higher the risk, the higher the reward, and that's just the nature of the stock market. So sometimes you take the losses for the bigger gain, like just for the bigger picture. So I hope with all of these things that I have said, have been able to convince you and just give you a good a soft landing on how to select stocks, how to, make investment decisions regarding equity stocks and yes, generally investments in general. So thank you very much. And yeah, I'll answer any questions if there are any.
Thank you so much, Mojo Lua. That was an insightful session. Thank you so much. I who is in this area, I have learned a lot too. Now, not even talking of the participants in today's session. So please let's give a round of applause to Moijoyinoluwa Olayemi. That was a great one. Thank you so much. I know you have questions for her, but just put down your questions. After the second speaker is through, then I'm going to, we'll take questions. I know you have all of your questions you want to ask. Okay, but before I move ahead to, introduce our next speaker, let's just take a little walk through what Mojo Lua has said. She has mentioned, which are very key. These are key things when you have to pick the right stocks, because in short, at this point, we are not at this point is as important as your money to pick the right stocks. Okay, so all of these things she has mentioned, let's just take a few and look at them. So the first thing I heard her say was invest with your goal in mind. Different investors have different goals. Okay, my goals and your goals are not the same. So that is why sometimes I don't really think that investment portfolios should match, because these are two different individuals. Okay, so there's no point because someone is buying this, you're also buying this. No, does it align? Okay, so these are key things that you look at when investing in the stock market too. And don't invest based on hype. This point she raised is a very important point. As far as I know that all of us here, or 80% of us here, on social media. In short, everybody in this call is on social media. And you know that the power of information, in short, the power of financial information can not be, the right financial information cannot be underemphasized. Like, it has so much power that it can make or mar your finances. So if you take a wrong information just because you just heard, because I see people, let's just bring it down to the one that we are used to seeing, where when a stock is already rallying and going up, and people are like, oh, I bought when it was $5. Okay, like a post I made yesterday around on my social media, sorry, around February this year, I mentioned that those people who bought first hold coal, were able to get it at about 48 naira per share. And as of yesterday, close of market, first hold coal was at about 129 or 30 naira or 129 or so. So that is more than, I think, 100%. Yes. So the money must have really, really grown. Okay. Now, but do you know that is most people hear that information? There are a lot of people, and I'm sure some of you are on this call. You think that is the best time to go and buy first hold coal? No. So you need to understand these things. These are key things you should understand if you are going to invest in the stock market. Okay. The stock market is cyclical in nature. Okay. If it's down, it's not going to stay up forever. If it's up today, sometime it will come down. Yes, but you need to know what you are doing for yourself. That is the essence of this session. So thank you so much. Thank you so much to our first speaker. You really nailed it. You nailed you nailed all those points, one for one. So thank you so much. Thank you, guys. Please let's clap for our first speaker. Please clap for her in the comments. Let's see. Appreciate her in the comments. All right, so we are going to move to our next speaker, and let's do a little introduction of our next speaker. Just a second, so that you know what or who she is. Okay, let's introduce her properly. Okay, just a second. Okay, so our second speaker for today, can you all see my screen? Please let me know if you can see the screen so that we move forward. Just unmute your mic here, say yes, so we move ahead. Thank you. I just need one response. Can you see the screen, please? Hello. You can see the screen, right?
Yes.
All right, thank you so much. So introducing our second speaker for today's class. This class is loaded. Okay, so our second speaker is Esther Oguntiloye. Okay, so I'm going to just do a brief, intro of who Esther is. Esther is an equity sales institutional trader. Okay, she is one who is passionate about the financial sector, equities, assets, and client management, investment analysis, and valuation. Her experience spans customer service to advisory to trading, execution in renowned firms like Coronation Merchant Bank, Meristem, FCMB, and currently she works with ARM Securities and has assisted clients and corporates grow and manage well. So this is who our next speaker is, Esther Oguntiloye. Please, guys, let's give a round of applause to our next speaker as she comes up to talk more into this topic, guys. Please, a round of applause to our next speaker, Esther. Hi, Esther.
Hi, wise morning, coach.
Thank you so much for joining us today. We appreciate you.
Yes, you're welcome.
Yes.
Good evening, everyone. Yes, good evening, everyone.
Welcome.
I would just like to first of all give a shout out to the first speaker, Mojoyin Olayemi. She has literally touched on everything. So I'll just be buttressing some of our points, before we take questions. So just like she rightly said, when investing in the stock market, you don't go with the hype. You need to go in calculated. You need to go in with some sort of intention. You need to go in with some sort of plan, right? So I'll just be stating some key things to look out for. First of all, like she rightly said, you would ask yourself as a youth, as an older person, or as a young person, what is my goal, right? Or as a parent, right? So we have people who have used the stock market for to achieve different goals and objectives. For instance, if you still have children that are minors and you even way below that, way like literally infants or toddlers, right? And you just want to to start creating wealth for them. The stock market is also an avenue you can use. What do? You open your stockbroking account, you inflow money, and then you pick good stocks. But how do you now pick those stocks? If you're investing for your children and they are still minors, it means you're investing for the long term. You're investing in growth stocks, right? You believe will still be around in for the next 3 to 5 years and will continue making profit. An example of that kind of stock is Aradel. If just like Mojane rightly said, if you look at Aradel's management, um, and how do you get a company's management? You look at their publications, their plans, their expansion plan, their growth plan. What their Rather, for instance, they're constantly doing one new thing or the other, in order to expand the company. Rather, by the way, is in the oil sector, right? And we've seen that stock go from about 500 naira, and today is trading at about 1,500 naira, and it has previously gotten to 1,900 naira before it dipped, right? And so when you invest in that kind of stock with the expansion plans that they have, of which everything has not even fully materialized, you will know that in the next 3 years, 5 years, they still have a lot to give, a lot to give to their investors, right? So you can invest in that kind of stock, for instance. MTN is another good stock. As we all know, they're in the telecommunications sector. Um, they've been doing lots of partnerships, even with some foreigners, outside the African continent, in order to bring good services. They've diversified from just regular calls. They've gone into fintech, and they're just literally expanding the business. So those are kind of stocks you can invest in for your children, and you'll be rest assured that these companies will just keep growing and growing and growing. Now, just like Mojane rightly said, when you talk about your if you're someone that has need for liquidity, right? Let's say you need to pay your children's school fees, which might be every quarter or might be every half year, for instance, maybe twice a year. I'm just giving it as an example. You want to look out for dividend paying stocks that are still fundamentally sound stocks, right? So the kind of stocks you can look at the financial sector. As we all know, nobody can do without the banks. We fund our accounts, we make payments, we withdraw, we do, and these banks earn fees from all these things. So that is why you see that on the Nigerian Stock Exchange, amongst all the listed stocks, they are the most profitable, right? So you can look at the banking stocks and they pay dividend consistently, right? So you can invest and expect dividend. Also, over the years, they have shown resilience in terms of their share price going up, higher. So we have the likes of GTCO, and we have the likes of Zenith in that category. So can you still hear me?
We can hear you.
Okay. My laptop went to sleep, so just wanted to be sure. So so those are good stocks you can look at. They will give they give
Yes, we
period.
can.
Yes, okay. So they give periodic um dividend income, right? So if you are someone that has, please 1 second. If you're someone that has need for periodic payments, you could go for dividend paying stocks and growth stocks. So for instance, we've had clients that have brought in a certain amount of money. Oh, I have this amount of money, I need good returns, I want to, even if it's just twice a year when they pay dividend, I want to earn something from this money to use to maybe do something substantial, or just cater to this in particular need while still keeping my original investment. So you can go for dividend paying stocks, right? So just like the first speaker rightly said, and like I've been saying, it depends on what your goal is, right? And if you want to still have a balanced approach to earn dividend and still keep it for long term, you go for good stocks, right? So we've had just like the ones I rightly mentioned, GT, Aradel, MTN. Recently, we also saw in the away from the sectors I've mentioned, we saw WAPCO, which the new name now is HBM, right? And their share price at the beginning of the year was still about 100 and something, right? And today, their share price is almost 400 naira, almost 400 naira, which is almost times three or times four of your of the initial price. And they declared dividend few days ago, last week, they declared dividend of I think about is it 14 to 16 naira to their investors, right? So imagine on every unit you own, you have that amount of income coming to you, right? So at the end of the day, you need to ask yourself, why am I investing in the stock market? Is it to grow wealth? Is it to keep for the long term? Is it that I don't have any savings? I just started saving. I want to just amass reasonable savings and and see it grow over time. That's long term. Is this something I would need in the next 6 months? Is this something I'll need in the next 1 year? You need to plan yourself accordingly. Now, going forward, how do you now then select these stocks? First of all, I'll look at it from the economy, right? We have different industries in the economy. First of all, the economy as a whole, um, excuse me, in the economy as a whole, but there are many there are many policies from the government, from CBN that affect the economy generally. We have things like interest rates, inflation rates. All these things affect the way businesses respond to these factors and how investors to respond to these factors. So for instance, if for example interest rates are high tomorrow, you see that banks will benefit more from this because they can earn more money when clients come to borrow money from them. The interest rate on borrowing goes up. So definitely, by the time they are releasing their results, that's for the banks, right? You will see that they've made more profits because they've benefited from a high interest rate situation in the country, right? On the other hand, if there's high inflation in the country, it could affect some other companies, for instance, the consumer goods sector, because their cost of production would go up, thereby affecting their income. So these are things to just look out for, right? Number one. Number two, another thing, so I'll just also give another example. In the past, there was an administration where we experienced border closure, right? There was border closure on some very key items, right? And when that happened, we saw the prices of certain goods go up, right? Because they were trying to that administration was trying to encourage should I say domestic production, right, of certain goods. And we saw those goods, the because of the scarcity and everything that was going on, the prices of those goods went up, right? So even companies in that sector that had those goods in their warehouse before, right? All they needed to do was just act in line, and just increase their prices accordingly, thereby giving them more profit. So it will be beneficial to watch out, to listen to the news and just know what is happening in the economy as a whole. Then another thing to now look at is now the industry. What industry do I Modrin said something very important. He said diversification, right? Not all industry will perform the same way at every time, right? So some sectors will benefit from changing customer needs, some will benefit from technological advancements, some will benefit from government policies, right? So it depends on what is happening in the economy and in the world as a whole, right? For instance, she also made reference to this Strait of Hormuz. You know that there's been um, like some sort of clash going on between US and Iran, right? And because the should I say exportation of oil passes through Iran to the US, right? And there's just been that clash between both of them. And every time there's that sort of clash, right, it drives the it drives the price of oil up, right? So that's why you see that anytime there's that kind of announcement, you see oil stocks all over the world, the share prices going up, right? So that's an example. So for industries, you just look at which industries are performing well. For instance, when there was should I say currency devaluation in Nigeria, was it 2024, when US dollar to a naira was almost 2000 or so. I think it became 1007 at some point, or 1006. Now it has settled to about 1004. But this was something that was coming from $1 to 400 naira, right? And so that kind of situation affected a lot of consumer goods, right? And some of them are just recovering. Why? Because some of the products that they use in their production are imported, so they had very high cost of production and all that, and it really affected their earnings. Their costs could not keep up with what they were earning from the domestic market, which is Nigeria. So those are things to look at. Then after doing that, you now look at the stocks. So you can just pick out 5 industries, for instance, and then list the stocks that are in under those industries, right? And then you might now want to pick the top ones that are best performing, so that your portfolio is diversified. You know, you can look at the company itself. For instance, I made mention of GTCO, Zenith in the banking sector. There's a reason why those two are like the top, are the best stocks to invest in the banking sector. Of course, we still have others. We have First Bank stock, for instance. Um, Earlier this year, I think First Bank was still at, was it 30 something or so. It's moved up to about it moved rapidly up to 15 naira, 16 naira. It moved up to, oh, I think it slightly hit 17 naira before it now dipped again, right? And those things were as a result of people's anticipation. Last year, for instance, they were to when they released their financials for the year, they were to declare good dividend, but the management team of First Bank made a decision that they were going to make settle some major debts that they owed, to about the tune of 700 billion naira or so, right? So because they paid that, they reported loss, but not that they were not a profitable bank, right? So now that they have now settled that, coming into this year, they released their results, and it was very fantastic. It was very fantastic, and the share price has gone up. As that, I think it's now settled somewhere around 120 something naira, for something that was trading way before and below 15 naira earlier this year, right? So the banking sector is profitable. That's number one. We have the oil sector too. We have the telecommunications sector. In the consumer and industrial goods sector, we have WAPCO, right? So those are companies to actually look out for. If you're still looking at the long term, right? If you are someone that really needs to diversify and touch on some other sectors, we have the brewery sectors, for instance. We have Nigerian breweries. They've been doing some very fantastic expansion plan. They've been acquiring some other businesses to expand their products. We all know them for Malta Guinness and all that, and the household malt drink, right? But they also have some other alcohol beverages. However, some clients, due to their ethical beliefs, right, they don't go for such stocks. So like I said, start from the economy. What is happening in the country, narrow it down to industries, list about 3 to 4 or 5 industries, and then list the stocks that are under those industries that are listed on the stock exchange, and then make your top picks in those industries, and then you can have a good portfolio. Then the last thing I will just say before I go is that timing matters. Timing matters, right? So while you've done all this, till tomorrow we can say, oh, GT is a good stock, is a good company, Ardell is a good company, Seplat is a good company, even Access Bank too. They're not they're a good company, but there are a lot of strategies that they are working on. Their growth plan is not as not how do I put it, is yielding bit by bit. Let me just put it that way. So they still have is a very good growth stock to consider if your plan is to leave your money in the market for the next 3 to 5 years, right? So, but when you look at all these stocks, even the ones that are yielding in the short term, like I said, some stocks have returned over 100% of share price this year. Some have even returned 200% or more, right? So, how then do you, so even though these stocks are good, the timing of when you enter matters. The principle in the stock market is buy low and sell high, right? So buy low and sell high, buy low and sell high. So you need to know what what price constitutes a low buy and what price constitutes a high buy, right, of a particular stock. So that is where, so you can always, one thing I can tell you, even though you're not a research analyst, you can use Google, right? You can just Google the name of a particular stock and say, give me the price history of this stock in the last 6 months. It will give you day by day prices or week on week prices or month on month price so that you see the highest it has gotten to where the price is coming from. Maybe January, February, March, till today. So that you have a sense of, oh, am I buying this stock at the highest price? So I'll just use a shoe for as an example, right? Or something that has value as an example, right? You buy something at 20 naira, and and tomorrow you can sell it for 15 naira, right? That way you have made profits. Maybe you're lucky enough to get it from a supplier that wants to give it to you at 20 naira, and you can bring it to the retail market to sell to everybody at 15 naira. That is a profitable investment. But when maybe a supplier or someone comes to say, well, I want to sell this thing to you, and the person wants to sell it to you at 16 naira or 15 naira, right? Including the cost of transportation, everything, maybe it now brings it down to 50, 55 naira, for instance. You now come to the market to say you want to sell it, and the market in the market is actually trading at 15 naira or even 14 naira. So definitely you would have to take the loss, or you would just hold on to that item until maybe something happens and that particular good now the price now skyrockets in the market, right? So it's the same principle in the stock market. So when you're buying a stock, you need to look at the current price and where the stock is coming from. There's something we call it in trading. It's called 52-week high, 52-week low. 52 weeks, meaning that over the span of 1 year, what is the highest price? And over the span of 1 year, what is the lowest price this stock has gotten to? So those are things you can actually Google for any stock you want to buy. So the principle is, do not buy a stock at the highest price it has gotten to, right? So always going at a lower price, so that. And another thing that can help at ARM, we every Monday, if you have an account with us, you would be getting recommendations. Sorry, 1 second. You'll be getting stock recommendations email every Monday, right, with the list of stocks to buy and list of stocks to sell if you have those stocks in your portfolio. So you can open an account with us at ARM, and you will see, you always get those kind of publications and recommendations. Without further ado, I think I think that's literally it. Mujinto has touched on many things, and I've just expatiated to many of the things that she mentioned. But that is not to say that there are no risk in the market. Like I said, pick good stocks that have good growth plans and still pay dividend at the same time. So you earn something in the short term, and in the long term too, you earn something. Thank you very much.
So much, Esther. Thank you so much. Please let's appreciate our second speaker in the comments, guys. In the chat, just appreciate her there. Thank you guys so much. Okay. All right. So Esther has really done great justice to this part of the topic, guys. She has done just as Mojin has also done. And one of the things I really picked from Esther's session was where she said your goals must align with whatever stocks you're buying in the stock market. Very, very important. And don't just just buy anything because you want to buy. Make sure it aligns. Make sure you marry your goals with the right stocks. And this, in short, the first speaker and the second speaker, all of the knowledge that has been shared in this session, guys, it's beyond. It's not something that you cannot understand. It's far from not understanding, because they broke down this concept, like all of these steps for you to be able to choose the right stocks. Okay, from Esther, we saw where you have to, you can actually diversify from different sectors. She even gave you this ABC step, that you choose the sectors, then the companies in those sectors, you look at the top ones. So these are really, really broken down. These are things that could take you a lot of time to understand. But the way Mojoyin and Esther have broken them down, they deserve a round of applause. Really, really, really deserve a round of applause. Seriously. And also, when Mojoyin was speaking, she also talked about, she gave an example of a retiree. So a retiree should, focus on dividend income stocks, you get. So these are things that can help you. This aspect, all of these things that both of them have talked about in this session, can help you, make informed decisions in the stock market. And I'm definitely, in short, I am so sure that after this session, you all will go back and you see the stock market from a different perspective. And also, I think Mojoyin also mentioned that you can speak to your investment advisor, speak to whoever is in this area that can help you navigate all of these things which you feel are really, really difficult. Okay, so I'm sure for Esther and Mojoyin, I'll just kindly request that their emails, they just drop their emails in the comment section. Esther, Mojoyin, please, is that okay? You can just type your emails just in case any of them want to reach out to you. And please, is that fine? So that, because I know a lot of them would want to, begin investing in the stock market, and they'll still need to speak with someone. Okay, so this is what can be done. And also, those of you in this session, you can feel free to drop your emails in the comments, and we will reach out to you for those of you who want to ask further questions outside of here, okay, or need guidance out of here. All right, so for the next few minutes before we end this session, we are going to take a few questions. So those of you who have questions, please, I would like you to just wait, drop a comment so that I see who wants to ask a question. Okay, so we have a question. So Esther and okay, thank you, Mojoyin Oluwa. So Mojoyin Oluwa's email is in the comment section, so you can reach out to her, if you have, need guidance, or you need, you have other questions outside of here. And those of you, please, let's see who wants to ask a question first. All right, so there's already a question in the comment. So Esther or Mojoyin Oluwa, please, you can do justice to this question. The question is from Nina. Thank you so much, Esther. The question is from Nina. Nina is asking, what do you suggest for a recently separated 56-year-old starting all over, trying to rebuild before retirement? So maybe both of you can do justice to that question. Today, the floor is yours. So you can just, Esther or Mojoyin Oluwa, any of you can answer that question. Nena dropped it in the comment section.
Okay, thank you very much, Vice Media Coach. Hello, Nina. So as to your question, you said, what do you suggest for a recently separated 6-year-old starting all over, trying to rebuild before retirement, right? So retirement that we're talking about is not very far anymore, right? So let's just say you have about 4 to 5 years or 6 years, So just like I rightly said, look for growth companies, aggressive growth companies. For instance, in the oil sector, we still had this conversation about Oando and versus Aradale, for instance, right? So while Oando is also a good stock, there's also a good company. Remember that investing in the stock market is investing in companies, right? So you see yourself as part of the company. Are they doing well? Do I love this company? Do I love what they're doing? And no company is every company is as good as their management. I think Mojani also mentioned something like that. So you see some management team, they are very well driven, right? They are very well driven. They have this aggressive growth plan. They're taking the bull by the horn. They're expanding and all that. So you see that with Aradale, you see that with GTCO. These are stocks I can think of at the top of my head as examples of stocks that you can buy, right? That you know that next year they cannot remain the same. In the next 2 years, they cannot remain the same, right? Their growth plan is that even like I rightly said, if you Google any of these names and you say, give me the stock price history of some of these stocks, right? You will see how the stock prices have grown over time, without decline. But just like we rightly said, some in if you in the space of a year, right, due to other type of investors in the market, speculative investors, you will see stock prices go up, come down, even for the best companies, right? It doesn't mean that anything has happened to those companies. It just means that people are taking their profit. They're probably pulling their money out for some other reasons, or but you can keep that money there, right? And also, while you're looking at the growth plan of these stocks, look at these stocks. They pay good dividend, right? So periodically, you will still be receiving dividend. When you receive the dividend, that one comes to your bank account. You can choose to put the money back into your stockbroking account so that it just keeps growing and growing and growing. So I would say go for um growth stocks that also pay good dividend. Thank you. You can also, of
Thank
course,
you.
I've got my email. You can still reach out to me for
All
more.
right. Thank you so much, Esther. That was detailed and well explanatory. So, Nena, I believe Esther has answered your question, and I believe it's easy and straightforward for you to understand. Nena, hope your question has been answered. Okay, so Esther's email is also in the chat box, so you can still reach out to Esther if you want to speak more. Okay, so we need to take at least 2 more questions. Okay, so any other questions? Okay. Okay, hi guys. Okay, I believe this was quite explanatory. Nobody has questions. Linda, Prechis, Apeve. Okay. I see Esther's hand is up. Okay, Esther, do you want to add something?
Yes, yes. So I
Okay.
wasn't sure if anybody else was going to ask any question, but I just wanted to also mention that one stock that I left out, I did not mention, is NGX, right?
Oh,
So
good.
NGX,
Thank you.
yes, NGX is the Nigerian Stock Exchange, right? So the
Yeah.
Nigerian Stock Exchange is also listed on its own exchange, right?
Yeah.
And it's also a good stock to look at, looking at where they are coming from to what their share price is today, right? I might not be able to quote actual prices right now, but like I said, you can Google these things and all that. So NGX is a good stock because they earn their income from the transaction fees that investors use to buy and sell, which happens every minute of the day, right? So you see NGX, their share price going on, and as we all know, Dangote Refinery is coming up. Even though the SEC released a circular saying that we should all calm down our anticipation, because they've not announced anything. However, a few days ago, we saw an announcement that they have now officially filed with SEC, right, which is the regulatory body. So we're just looking out for the announcement. So just and apart from moving on from them, any other stock that comes to list on the Nigerian Stock Exchange, the more companies come to list, the more money Nigerian Stock Exchange itself earns, right? So you can also see that as a futuristic stock that you can buy for long term. I just wanted to add that, but I'm
All
also
right.
seeing some other questions.
Okay, go ahead if you module Esther.
Yeah, so Marjorie actually reached out that she will be dropping off. So she's dropped
Okay,
off
okay.
already.
Okay,
Yes.
please feel free to answer. Thank you.
Okay. So Linda is asking that some stocks are difficult to sell. Why? So, so exactly like what we said earlier, timing also matters, right? So, for instance, um, 1 month was so I think around March, April, banking stocks released their financials for the last year, for the total year, for the year 2025. When you talk about financials, we're talking about what the company made from January till December 2025, right? So they released that result to the general public, right? So when they released that result to the general public and declared good dividend, right, their share price went up, right? I think GT got to almost 150 at that time, right? Before investors now took their profit out and then the price now declined. So imagine you buying at that 150 naira at that time and it went down, it went back down up to almost going back to 100 naira. Of course, you won't be able to sell because you'll be selling at a very big loss. So you would have to wait until when, and the share price is gradually coming back now. It's I think GT now is about 120 something or almost 130. And by the time they release their half year results, the price will also jump back up. So that's why I said that if you invest in a good stock, even if there's a dip temporarily, it will still go back up, right? So I'm just giving an example of why it might be difficult to sell. Now there are some other stocks that are new stocks, new companies that are new companies. For instance, we have Geregu, we have Transpower. Those companies came to the stock market to raise capital for their newly listed or founded company, right? And you have to give them time to put that money to work. So when they come to raise money in the capital market and everybody invests, of course, as more people are buying, the share price will continue to go up. So if you don't understand the timing of when to go in, and then you go in at when they've raised what they want to raise, the people that bought it would then want to sell. And so we have some of those stocks, they're just on full offer. Full offer means that there's a long queue of investors that want to sell the stock and there's nobody buying because there is no news. They've not come out to say, oh, the money you gave us, so we're making profit. This is what they've not declared dividend. They've not. So those stocks, so people are just stuck there, right? So that's why we said timing matters. Timing matters, and getting information, especially on the stock price history, also helps, as well as research reports that you get in your emails. And then Inina is also asking that is NGX a long-term keeper like GT? Yes, it is. Like I rightly explained, right? The NGX is as long as the stock exchange exists, right? They will keep making their money. As more companies are added to the stock market, they keep making their money. And another reason why, right, this year they increased the pension fund administrators, the Stanbic pensions, all these pension houses that keep a part of our salaries for our retirement. Those monies that they take from our salary as pension, they must invest it, right? So, and by regulation, they have a percentage you must put in the stock market. So this year, that percentage you must put in the stock market was increased, meaning that more money will come from those PFAs into the stock market. At the same time, the trading time moved from 2:30 to 4 o'clock. So now we have longer trading sessions, right? Which is more investments, more investor participation in the market. Of course, which will translate to more fees, more charges and all that coming to the NGX. So all this is what will feed into their books. So we can look at, and with all the futuristic plans they're making, they've reduced the payment time. If you sell your shares and you want your money within a day, you can get it, unlike 3 days before. So all these favorable things, puts NGX on the list for a very good long-term stock. Yes, you can invest in it. Thank you very much. I hope I answered your questions.
Thank you so, so much, Esther. Thank you so much. I believe, Nena, your question has been answered. It was quite straightforward and, easy to comprehend. Thank you so much, Esther. Thank you so much, Mojino Lua. It has been an amazing time together. Thank you. So I'll just like to add, I know I believe Esther added, she said that, but let me just say it again. Um you can get stock recommendations inside your ARM1 app. Okay, it's there. So every Monday you can see a list of stocks, either to buy, to sell, and all of those recommendations. And also, if you would like to get detailed, another, like you want to get recommendations in your email, or daily stock equity reports and all of those information that can keep you abreast, with in knowledge with the stock market, then you can drop your emails in the comments in the chat, and I would forward them to Esther and Majinoluwa, and of course you will begin to receive all of this important information that can aid your journey in the stock market and make you really, really successful. Because all of this knowledge sharing that has been done here today, the most important is, as long as you understand, then you're headed towards success. All right. So it has really, really been an insightful session. And I must say, even I myself, who is in this area, I have learned a lot. And I'm sure all of you participants have also learned a lot. So all of these tips and all of this, guidance to be able to pick the right stocks have come in handy in this session. And I believe that, it's one thing to gain knowledge, and it's another to put that knowledge, at the back and just keep doing the old things you were doing. But now that you've all gotten this knowledge, I believe the wise thing, the smart thing to do is to put to practice what you have learned, even if baby steps. Okay, I know some of you may not be able to do all of those analyses to be able to pick the right stocks. That is why you can get expertly recommended stocks on the ARM1 app or via email from ARM Securities Limited. So it has been an amazing time together, guys. And I must say, you guys who turned up for this session, you guys, I'm excited for you. I'm really, really excited for you. Okay, I can see your emails, and Nena is asking, are we going to talk about MMF? No, we're not going to talk about MMF in this session because that's way out of it. Today, we just want to focus on stocks, equities. All right. So, but you can reach out. We can continue. You can send a message and we can continue. So I'm going to also drop my email in the comments so that you can reach out. But I'd like to, before I end this session, I would just like to say thank you to our speakers for today. I must really say I'm so excited that you guys joined, and I'm so excited. Thank you to Mojino Lua, and thank you to Esther. You guys were amazing. Thank you so much. Thank you to you guys. It's been an amazing time together. Please put to practice all that you have gotten in this session. Don't let this knowledge, go to waste. Thank you, Adenike. Thank you, guys. So thank you all. Thank you all. The recording for this session will be sent to your emails. So please, if you want, thank you, Nena. Thank you so much. Thank you, Akbevwe. Thank you too. I'm glad you learned a lot. So if you want the recording for this session, Abiodun's hands are up, but we are rounding up. Abiodun, can you drop your question in the comments so that it can be answered? Or do you want to speak? We can spare you 1 minute. We can spare
Why
you.
don't you let me? Why don't you let me speak directly? I just want to find out.
Okay, sir, go ahead.
I just want to find out in the volatility of our naira, the way it goes up and it goes down. When you buy your stock, the value of your naira at the time you bought it, and in the next maybe 4 or 5 years time, the value of what you bought then and the value in the next 5 years when you are selling it, will it still be able to appreciate? The money might have gone up, but
Yeah.
that money may not be able to buy the same things in the
Things.
market. It may not have the
Okay.
same value. Unlike
Yeah.
when you say, okay, I bought a land. Now, in the next 5 years, my land could have multiplied in value. You understand?
Yeah.
Is it the same? Will it have multiplied the value? Would I be able to? Am I sure that if I buy 10 million now, and what 10 million can buy today in the next 4 years, if
Will
it
it
is now
buy?
45 or 15 million, will it be able to buy more than what I would have bought with my 10 million presently?
Okay, Mr. Burden, thank you for that question. I think I'll just, answer this one. So that is the effect of inflation, basically. Okay, so inflation, eats up, the value of your money over the years. I know that in recent times, in as much as, inflation was easing off, yes, but even the CBN, still has some, aspects that they're still looking at, from the last MPC meeting, that held. There are some aspects that, they're still looking at, because even with that, food inflation still remains high. So I totally understand what you're saying. And if the value, even after investing, if the value of your money invested, irrespective of the fact that the money must have grown, but would it be able to, still buy, certain things in the future after time has passed? Yes, I totally understand. uh, in as much as, investing is actually good, it's still better than, just putting your money somewhere and just leaving it. That is why in this case, that is where you go for investments that help you, hedge against inflation. Okay. And in this case now, today we are speaking mostly on Nigerian stocks, yes, but if you want to look at, at ways to preserve the value of your money, it's highly recommended that you invest in things like dollar denominated assets. Yes, so that can also help you, if you're really scared that, inflation will eat up the value of your money. You can invest in dollar, or you can, put your money in a currency like dollar, and you can get things like dividends. So we have, the way we have Nigerian stocks is the same way we have dividend paying stocks. In as much as I know that this is taking us out of, the topic for today, but I know it's very, very important I answer this. So you can go for, those investments that help to protect the value of your naira. An example, US stocks. Okay, so that's one way you can do that. So that if you're investing in another, like a currency like dollar, then your money, your naira, is not so exposed to whatever, inflation occurs on the naira. That way you're investing in dollar, you're also, preserving your money against the inflation of the naira. Okay, so Mr. Bioden, I believe I've answered your question.
Yes, it's okay.
Yes,
Thank
sir.
you.
Yeah.
Thank you
All
so
right,
much.
guys. So we've come to the end of this session. Please, if you want the recording, yes, thank you, Linda. Please drop your emails, and I'm going to, send the recording out to you. Guys really need to re-listen and re-watch this session. Thank you all for joining. God bless you all. Thank you. Thank you.
kí ló wá ẹ̀dí kí ló wá tó sọ lẹ́ẹ̀kan. Tó dẹ̀ rí tí mò ń sọ̀rọ̀ mo rọ lọ́wọ́.
Hello, Mr. Abiodun, you're not muted.